There are a few different ways you can protect your money from the taxman here in the UK, and without a doubt, an ISA is one of the best options. Hi everyone, welcome back to my channel. If you're new here, hello, my name is Fernanda, and on this channel we talk about personal finance, personal development, and I help you make a mindset shift to get you to your financial goals even faster. Today's video will be your complete guide to ISAs. I tried my best to cram in as much information into this video in the shortest amount of time possible, so I hope you do find some use for it. And if you have any questions, make sure to leave them down in the comments and I will answer them all for you. I also asked you on Instagram if you had any questions about ISAs, so stay until the end of the video because there's a little Q&A section there and I'll answer the questions I got over on Instagram. I'll put a link down in the description and make sure you are following me on there because whenever I have a question on what video you guys want to see, I'm asking it over on Instagram, so make sure you have your say as well. So what is an ISA? ISA stands for Individual Savings Account, and it was introduced back in 1999 by the British government as another push to get the British public saving a little bit more. Really, the simplest way to think about an ISA is like this. Imagine this is your savings account. You are funding it regularly, you put a little bit away every month, and this is the amount you have managed to save. Now, with a normal savings account, your bank would be paying you a little bit of interest every month on the money you have managed to save. But with a normal savings account, you're still required to pay tax on any income that exceeds £1,000 a year. But the brilliant thing about ISAs is that as soon as you slap on an ISA wrapper on the savings account, it means that whatever interest your bank pays you won't be subject to tax anymore. This is basically how a cash ISA works, but there are actually 4 different types of ISAs. You've got cash ISAs, you've got stocks and shares ISAs, also known as investment ISAs, you've got your innovative finance ISAs, and the newest one in the lot, I believe it's a lifetime ISA. And finally, I thought it was also worth mentioning, you've got what are called junior ISAs. So they can just be normal cash ISAs or stocks and shares ISAs, but you can open them for your children when they're born, and when they're 18, they'll have access to the money you've managed to save. To start with, a cash ISA basically does what it says on the tin. Whatever money you have saved in that account won't be subject to any income tax. However, these accounts really normally pay minimal interest on the money that you've got there. So in real terms, due to inflation, you could potentially be losing money. This is of course balanced out by how low risk these accounts are. So even though you might not be making a lot of money, the chances of you losing any money are basically down to 0, especially if the account that you're saving in is protected by the FSCS. Next up, you've got a stocks and shares ISA, also known as an investment ISA. Also does what it says on the tin. It's called that because your money will be invested in shares, bonds, property, or other assets like commodities. Of course, things get a little bit riskier here because there's no guarantee that your investment will go up, and it could go down, but the returns could be substantially better than on a cash ISA. The best thing about a stocks and shares ISA, in my opinion, is that you really don't pay any tax on any return your investment makes you, whether that be capital gains, which means the underlying security going up in value, or any dividends that those shares might be paying you. So again, even though it does present a lot more risk than just a cash ISA because your money is invested, one way to protect yourself against that risk is just having a long-term investment strategy. Even though we are talking about investing, a stocks and shares ISA is not a get-rich-quick scheme. Remember that. Now going up a step further on the risk level, we have innovative finance ISAs. These are accounts where you'll be using a peer-to-peer lending platform and you'll be lending money to other people or other businesses. Now, because these accounts are not protected by the FSCS, there is a great risk that if the person you've lent the money to or the business that you've lent the money to defaults on their loan and stops paying it, you won't get your money back. Of course, as with any type of investment, the higher the risk, the higher the promise of the returns. So even though you could get a lot more bang for your buck with this, there is also that ever-present risk there. So that's something to be aware of. Now finally, the one that I think needs a whole video of its own because there are so many details about it, you have the lifetime ISA. To me, this is the most attractive one of them all because it basically gives you the highest guaranteed return on your money. With a lifetime ISA, the UK government will give you a 25% bonus on any money you put in there up to £4,000 a year. That means that if you are able to save the full £4,000 per tax year, the government will give you £1,000 free. Now, I don't need to tell you that, of course, there is a catch here. A LISA is only allowed to be used for either a deposit on a house or for saving for retirement. And you also have to be between the ages of 18 and 39 to open one. Now, each tax year, which runs from April to April, you are allowed to open one of these types of ISAs, and you're only allowed to contribute to one of each type per tax year. This is important. You're not allowed to contribute money to 2 cash ISAs each tax year, or, for example, different stocks and shares ISAs in the same tax year. Your annual allowance for contributing to ISA accounts is £20,000 each tax year. That means, for example, you could contribute £10,000 to a cash ISA and then another £10,000 to a stocks and shares ISA. But you could not open 2 stocks and shares ISAs and put £10,000 in each one of them. That's not allowed. The maximum £4,000 contribution on a lifetime ISA does count towards your annual ISA allowance. So, for example, if you are able to save the full £4,000 into your lifetime ISA, it only leaves you with the remaining £16,000 to split across your other ISAs. To be honest, I think ISAs are a really generous vehicle that we have available to us here in the UK. So really don't miss out on your opportunity to be maximizing your money and protecting it from unnecessary tax. The first question I got is from Mom, I am a rich man. I love that username. And she asks, my partner has a help to buy ISA, I have a LISA. Can we use both towards a home deposit? I think that's a really good question, because with all these different types of help to buy schemes, things get a little bit confusing. From the information I have been able to find, and that is also on the government website, yes, you can use both a help to buy ISA and a LISA if you're buying with someone else. If you're buying solo and you have both a help to buy ISA and a LISA, you can use both accounts, but you can only use the government bonus from one of the accounts. You don't get to have your cake and eat it too. The lovely Pence and Cents asked, what do you think of the innovative finance ISA? And like I said in the video, I think it's very risky. It personally doesn't fit me and my investor profile. I am incredibly risk averse, so it's way too risky of an investment for me personally, but obviously it's a product that's available, and if it fits your risk appetite, I'd say go for it. Nanda Bolosa asks, if I get a lifetime ISA for retirement purposes and I invest the 4K a year, can I get my tax allowance increased? I believe the answer to that would be no, because your contributions to a lifetime ISA are done after you've paid tax. It wouldn't count towards any tax deductions or tax allowances, so I don't think that would make any difference, unfortunately. Pence and Cent also asked, thoughts on help to buy ISA versus LISA? So the reason why I hadn't mentioned help to buy ISA previously in the video is because they're not available anymore. This is a scheme the government started years ago, which also helped you to save for a deposit on a house, but they closed that scheme in November 2019. So you're not able to open a help to buy ISA anymore. And from my research and the reading that I've done on them, I think a LISA would work out a little bit better. I think a LISA gives you a slightly more generous government bonus, so I'd stick with a LISA. If you currently have a help to buy ISA, you can keep contributing towards it, or you can actually get it transferred over to a LISA. And that's it for today's video. I hope you found it useful. I hope you learned something new. And I really tried not to cram too much information in. I really tried to keep it snappy. I didn't want to overwhelm you with too much information. So if you do have any other questions about ISAs, make sure you leave them in the comments below and I'll do my best to answer all of them. And of course, if you did enjoy this video, make sure to give it a thumbs up. And if you'd like to see more videos from me, make sure to subscribe to my channel. I post new videos every week. I'll see you on the next video. Bye! Yes! I've been waiting all day to eat this chocolate.